Good morning and welcome to today's Crypto News podcast. We've got a packed show for you today with some major developments in the world of cryptocurrency. From attempted kidnappings to new ETF filings, we'll be diving into the stories that are moving the market.
That's right. Let's start with the shocking news out of Spain, where 3 individuals have been arrested for plotting to kidnap and extort a British crypto broker. The victim, who was held captive in an apartment in Estepona, managed to escape by jumping 30 feet from a balcony.
Absolutely terrifying. And what's even more disturbing is that this appears to be another case of what's known as a wrench attack, where individuals are targeted for their cryptocurrency holdings. The kidnappers were demanding $31,000 in digital assets, but thankfully the broker was able to avoid surrendering any client funds.
Yes, and the details of this story are quite remarkable. The 34-year-old victim broke both ankles in the escape, but still managed to outsmart his captors by using Hindi during a coerced phone call to alert his clients not to send any funds.
Incredible. This is just the latest example of the risks associated with holding cryptocurrency and the lengths to which some individuals will go to get their hands on it. We'll be exploring this theme further throughout the episode, but for now, let's move on to some more positive news.
That's right. Grayscale, the crypto investment firm, has filed to list a Cardano ADA exchange-traded fund on the New York Stock Exchange. This is a significant development, as Grayscale has never previously offered a standalone ADA investment vehicle.
Yes, and this move comes on the heels of Grayscale's success in breaking through the U.S. regulatory blockade against the Bitcoin ETF last year. It's clear that the company is looking to expand its offerings and provide more options for investors.
Exactly. And this filing is also notable given the current regulatory environment, with the Trump 2 SEC seeming to pivot away from policing the crypto industry. We may see more ETF filings in the coming months.
We'll be keeping a close eye on this story and exploring its implications for the crypto market. Throughout the episode, we'll also be discussing the potential impact of this ETF on the price of Cardano and what it means for investors looking to get involved in the space.
I think it's interesting how our previous discussion on the rise of decentralized identity verification is playing out in real time. Just yesterday, we saw significant development in this space with the acquisition of Gitcoin Passport by Holonym Foundation.
That's right. The deal, which involves both cash and tokens, essentially unites two companies that were already closely tied. Holonym's technology was being distributed through Gitcoin Passport, a platform that allows users to store proof of personhood for various services.
Exactly. And with this acquisition, Holonym is scaling up its presence in the proof of humanity sector, which is becoming increasingly important in the crypto space. Some are even calling it a WorldCoin alternative.
But building on what we discussed earlier, this acquisition highlights the growing importance of decentralized identity verification in the crypto ecosystem. As more services require proof of personhood, platforms like Holonym and Gitcoin Passport are well positioned to capitalize on this trend.
Speaking of trends, there's another development that's worth noting. It looks like the U.S. regulatory landscape for crypto may be shifting in favor of the industry. With President Donald Trump's new management at the Office of the Comptroller of the Currency, OCC, and the Consumer Financial Protection Bureau, CFPB, we may see a more crypto-friendly approach from regulators.
That's a great point. The OCC and CFPB are two key agencies that have a significant impact on the crypto sector. And with this new leadership, we may see a more relaxed approach to crypto regulation. Coinbase CEO Brian Armstrong has already expressed his enthusiasm for this development, which could be a positive sign for the industry as a whole.
It's also worth noting that the FDIC is overhauling its crypto approach, which could be another positive development for the industry. U.S. senators are examining regulators' role in keeping banks out of crypto, which could lead to more clarity and guidance for financial institutions looking to enter the space.
Overall, it's clear that the regulatory landscape for crypto is constantly evolving. And with these recent developments, we may be seeing a shift towards a more favorable environment for the industry. We'll continue to monitor these developments and provide updates as more information becomes available.
Absolutely. And as always, we'll be keeping a close eye on the intersection of crypto and regulation. It's an area that's constantly changing, and we want to make sure our listeners are informed and up to date on the latest developments.
That's right. And with that, let's move on to our next story.
So we were just discussing the recent price movements in the crypto market and how Ethereum seems to be gaining more traction. Building on what we discussed earlier, it looks like investors are taking notice and putting their money where their mouth is.
That's right. According to data from CoinShares, investors poured $793 million into Ethereum investment products worldwide last week. This is significant because it's the first time this year that weekly deposits into Ethereum-based funds have outpaced those into Bitcoin products.
Wow, that's a big shift. It looks like Ethereum is finally getting the attention it deserves. And it's interesting to see how this trend is playing out in the market. What do you think is driving this sudden interest in Ethereum?
Well, it's hard to say for sure, but I think part of it has to do with the growing awareness of Ethereum's potential uses beyond just being a cryptocurrency. We've seen a lot of development in the decentralized finance DeFi space, and more people are starting to realize the potential of Ethereum's smart contract capabilities.
That makes sense. And it's also worth noting that Ethereum has been making some significant strides in terms of scalability and security, which could be making it more attractive to investors.
Exactly. And speaking of security, we've got a story that highlights the importance of protecting online accounts. An Alabama man has pleaded guilty to hijacking the SEC's Twitter account to pump Bitcoin.
What? That's crazy. How did he manage to do that?
Apparently, he was able to gain unauthorized access to the SEC's Twitter account and posted a fake tweet that said, the SEC had approved the listing and trading of spot Bitcoin exchange-traded products.
That's wild, and I'm sure it caused a lot of panic and confusion in the market. It just goes to show how vulnerable online accounts can be and how important it is to have robust security measures in place.
Absolutely, and it's also a reminder that we need to be vigilant and skeptical when it comes to information we see online, especially when it comes to financial markets. We can't just take things at face value. We need to verify information through reputable sources.
Well, it's definitely a cautionary tale, and I think it's a good reminder for all of us to be more mindful of our online security and to always do our due diligence when it comes to investing in the crypto market.
Agreed, and we'll continue to monitor these developments and bring you the latest updates as more information becomes available.
Building on what we discussed in our previous segment about the growing adoption of cryptocurrency in mainstream payments, we've got some exciting news from Europe's largest payments company, Klarna. The Swedish-based firm known for its buy now, pay later service has announced plans to integrate cryptocurrency into its platform.
That's right. And this move shouldn't come as a surprise, given the increasing demand for alternative payment methods. Klarna's CEO, Sebastian Siemiatki, took to X to break the news, stating that the company will explore ways to incorporate cryptocurrencies, although he warned it might take some time.
With a valuation of $14.8 billion, Klarna is certainly a significant player in the European payments market. It's worth noting that the company is backed by venture capital firm Sequoia Capital, which holds a 22% stake. This investment could be a driving force behind Klarna's decision to adopt cryptocurrency.
Absolutely, and Sequoia Capital's involvement could also provide the necessary resources and expertise to ensure a smooth integration. This move has the potential to bring cryptocurrency to a wider audience, and it's exciting to think about the possibilities.
Speaking of the importance of regulation and law enforcement in the crypto space, a recent operation in Thailand has resulted in the seizure of $2,500,000 worth of Tether's USDT stablecoin. According to reports, Thai and Chinese police collaborated to arrest two Chinese nationals accused of running a large-scale scam operation.
The authorities were able to confiscate the stablecoin holdings, which were allegedly obtained through the scam. It's great to see international cooperation in tackling these types of crimes, and it highlights the need for continued regulation and oversight in the industry.
This case also emphasizes the importance of investor education and awareness. Scams like these often prey on unsuspecting victims, and it's crucial that individuals do their due diligence before investing in any cryptocurrency or project.
That's right, and as we've discussed before, the cryptocurrency space is still largely unregulated, making it a breeding ground for scammers and malicious actors. However, with increased cooperation between law enforcement agencies and regulatory bodies, we can hope to see a safer and more secure environment for investors.
We'll continue to monitor these developments and bring you updates as more information becomes available. In the meantime, it's clear that the intersection of cryptocurrency and traditional payments is becoming increasingly important, and we can expect to see more companies like Klarna exploring the possibilities of crypto integration.
And as we move forward, it's essential to balance innovation with regulation and security, ensuring that the benefits of cryptocurrency are accessible to all while minimizing the risks.
All right, let's talk about some of the more unconventional stories in the crypto space. I think we can all agree that Dave Portnoy, the founder of Barstool Sports, is a wild card. And his latest move with the Solana meme coin jail stool is no exception.
That's an understatement. So, for those who might have missed it, Portnoy basically sold his jail stool coins by accident while taking a bathroom break, only to immediately reinvest his entire Solana account back into it.
Yeah, because that's exactly what you do when you're a benevolent and heroic crypto Caesar. But in all seriousness, it's interesting to see how influencers like Portnoy can impact the market with their actions. We've seen this before with Elon Musk and Dogecoin.
Exactly. And it's not just the market that's affected, but also the perception of crypto as a whole. When you have someone like Portnoy, who has a huge following, jumping into the space and promoting a particular coin, it can bring in new investors and create a buzz around the project.
That's true, but on the flip side, it can also create a lot of volatility and unpredictability. I mean, who knows how long Portnoy will stay invested in Jailstool or what his next move will be.
Absolutely. And speaking of unpredictability, let's talk about the growing trend of states pursuing crypto investments. North Carolina is the latest state to join the list, with 19 states now weighing bills to put public money into digital assets.
Yeah, this is a story we've been following closely, and it's interesting to see how states are taking different approaches to investing in crypto. Some are looking at creating a strategic Bitcoin reserve, similar to the federal government's pursuit, while others are exploring more experimental approaches.
And it's not just about investing in Bitcoin or other established cryptocurrencies. Some states are looking at investing in blockchain technology more broadly, or even creating their own state-backed cryptocurrencies.
That's right. And while none of these efforts have yet cleared the state legislatures, it's clear that there's a growing interest in crypto at the state level. Utah's bill, for example, has already passed a state house vote.
So what does this mean for the market? Well, for one, it could lead to increased adoption and mainstream acceptance of crypto. If states start investing in digital assets, it could help to legitimize the space and attract more institutional investors.
That's a great point. And it could also lead to more innovation and experimentation in the space. With states taking different approaches to investing in crypto, we could see some really interesting projects and initiatives emerge.
Absolutely. So to wrap up today's show, I think we can say that the crypto space is as unpredictable and exciting as ever. From influencers like Dave Portnoy to states pursuing crypto investments, there's always something new and interesting happening.
That's right. And as we look ahead to the rest of the week, we'll be keeping a close eye on these stories and more. Thanks for tuning in, and we'll catch you all tomorrow.
And don't forget to follow us on social media for all the latest crypto news and updates. Until next time, stay crypto savvy.
And don't sell your coins while taking a bathroom break.
Words of wisdom, folks.